If you look at the Aadhaar system in India, then that is a very big positive factor in terms of being able to facilitate KYC, which really is absent in most other countries and certainly hasn't been there to support digital KYC innovation in markets such as Europe or the US. They've really lacked that centralized database and facilities and all of those processes around that. That means that because those systems are in place, that's actually very useful, and that can be a really good way to improve the growth of how digital KYC is mandated. You've also got a pretty supportive regulator in terms of the RBI. You mentioned that revised guidance in January 2020, which is helpful for the market. And again, that's not a measure we've seen in quite a few other markets. A lot of other regulators have sort of taken a sort of hands-off approach to digital KYC. A lot of the regulations are quite vague in terms of this is what you need to ensure with KYC, but it doesn't tell you how to achieve that. So by being very sort of prescriptive in how it wants to, how the RBI wants that to happen, that's useful for future growth, and that builds a platform, but it is a bit restrictive in terms of how specific that needs to, in that specific way it needs to be carried out. The other thing I would say as well is the current restriction we've got in terms of financial services and regulated services being the ones that can access digital KYC at the minute. That is fairly restrictive in India, and that's not reflected in other markets. So in a lot of other markets, you've got a lot of access for non-financial services players, and there isn't the sort of restriction that there is in the way in India. So that's an interesting one, and I think that's going to take some navigating in the Indian market. But I think that Aadhaar system and the progress that's there in that way is going to make this a faster growing area in India than in a lot of other markets. That's how we see this anyway.
Thank you, Nick. I'm going to bring in the others on their views so that they can build on what Nick said. Any specific thoughts, Harvinder, Timmana, and Mr. Milind?
Yeah, they say, like the World Bank says, out of 8 billion people, 1 billion people don't have any identity, and 2 billion people don't have digital identity. Today, if you don't have a digital identity, you don't have an identity. I think there India has scored very well. When you have covered 1.39 billion people, 139 crore people, with one identity, and you are able to deliver the DBT, very basic, few thousand rupees, whether it's a flood, famine, or even the PM Kisan. And I think we have done the first thing. If you see, the urban people are less digital than the rural people. I've been dealing with Karnataka Gramina Bank through NABARD schemes and all that. We're able to qualify a farmer in 10 minutes with a KYC, which is taken from Aadhaar, and a gas card, because most of these guys are gas card beneficiaries, gas beneficiaries under the free scheme. We got two things, and in addition to that, we are able to achieve access to the land record. This was taking 15-20 days. Now I'm going into the practical aspects of it. Now we got it down to 10 minutes. I mean, India is far ahead. When I look at European markets, I've been talking to Australia, I've been talking to Canada and US. They have it, but I think we're far ahead of that. The digital infrastructure is already built over the last 3-5 years. But what I see is banks are lacking to latch onto it, build on top of it quickly. I think Harvinder will agree with me when we try to look at the banks. They look at RBI. There are so many regulations we will read and reread and find something else. As recent as last week, the top private banks are not even adopting DigiLocker, saying that there is something which is written which DigiLocker is not meeting. So I feel the India is ahead, and we will stay ahead. And you go to the last mile, lowest economic class, literate, illiterate, or semi-literate, doesn't matter. That's my take on this.
Thanks. Harvinder, Milind, your thoughts? If you want to add anything to this position that we are ahead of the curve?
Yeah, I would like to put a point in fact. If you look at the digital payment landscape in India, which has grown significantly over the last few years, both in terms of product innovation and wider consumer usage. And look at that, COVID-19 has also fueled this growth immensely. People have found transacting digitally to be a contact-free and safer ways to make payment and access financial products. The shift from physical to digital is likely to be a permanent one as fintech platform continues to innovate, giving customer access to more convenient and customized financial solutions. And RBI has taken many positive steps in this direction by implementing video KYC and leveraging Aadhaar Slack for onboarding for certain entities. And I completely agree with Nick that there is a big chunk of non-financial institution which is in the space to be navigated by the regulators into the direction where it is easy for customers to have an ease of access to the services and the products, and at the same time, companies to build that trust on the customers. So that layer is a little bit, requires navigation. It is much more clear from a financial product standpoint, but yeah, non-financial product is something that we should definitely talk more on that aspect.
Right.
So after
Yeah.
Tamanna and Harvinder has said so many things, I don't know whether I have anything left, but I would like to definitely talk about what I take pride in is the mere scale of population that we have. And we have included national ID across the country, and more than 90% of the population is already covered under it. So we have eKYC data for so much of population, and wonders can be done with it. No doubt, we are much ahead of scale curve as far as this thing is concerned in the entire globe. And more than that, what I would like to say is the time period within which we have achieved it. Being able to achieve this kind of a scale within 7 years is something which every person in our country should be proud of. And that has been possible only and only because of the conviction that with which our country went forward on this thing. No doubt there were a lot of debates, there were a lot of arguments, there were a lot of controversies, but that is the way how the reforms happen. Unless and until there is no opposition, you cannot make a robust reform. Only when the opposition is there, you are able to fine tune it and make it into a robust form. The second part of it is that those people, the second thing that I would like to call out is the blessing or innovation that our country has done as far as UPI is concerned. Because of this eKYC, we were able to come to UPI. And because of this UPI, today, even a 5 rupee payment to a road vendor, you can make a UPI without handling cash. And that comes to talking about this pandemic. So I think it was all, fortunately for us, it was all timed well. Just before the pandemic came, we matured in these kind of things. We had those applications, we had those infrastructure. Mobile population in our country is like nothing. It's one of the most populated country with most mobile population. As Tamanna called it out, even in rural areas, people are using mobile. And that is the reason why I think our eKYC initiative has definitely been much above in terms of reach and scale. But adoption and absorption of this concept in every sector is something which has not happened to the extent it should have happened. We talk a lot about BFSI because that is where all the game is. But there are so many other sectors, and as we go further, I will speak about that too, where eKYC adoption is necessary, but it is not happening.
Right. So a very clear common consensus that we've done things right. I think we're well positioned to contribute well and be leaders in this space. But again, in further questions, we're going to explore some of the other aspects that you brought up and the others brought up around maybe some of the other sectors where we probably can do more. And I'll segue into my next question, which again, Milind, is I would like you to kick that off. So in continuation of our thought, how do you see the future of digital KYC evolving in India, both for financial and non-financial consumer users? I think a lot of the concentration so far in our output has been on the financial services sector, but like you rightly mentioned, there are other sectors which could really benefit. So would love to get your thoughts on that, and then for others to pitch in.
Yeah, sure. Thanks for asking me that question. Actually, it is continuation to what I was trying to tell a few minutes back. That as far as financial sector is concerned, we know eKYC is very well adopted. Now, this eKYC has become the talk of not only the nation but the globe as far as India is concerned, since we have this Aadhaar in place and Aadhaar infrastructure in place. But there was eKYC facility available even before that. But no one knew about it because it was all siloed. And Timmana will agree with me, the KRA initiative, which primarily was there for mutual fund eKYC, was something which was there very much available, but it was restricted to only mutual fund industry. Many years back, biometric-based KYC system was adopted by SEBI, which was called as MAPIN. Ultimately, it died out, but which was called as MAPIN, is something which was eKYC mechanism in those days without the use of fancy jargons and fancy words, but restricted only to capital market players. PAN is considered as an eKYC mechanism because there is online PAN verification available for everyone, which are approved by Income Tax Department. And PAN has been all digital for many years now. So from that point of view, but again, it was very restricted to certain entities whom Income Tax Department would approve for the use of it, mostly the banks and financial capital institutions. So what I'm trying to say is that eKYC was always there. It has become a talk of the town. It has become a popular term and adoptable term because of Aadhaar. And financial institutes were much ahead of it because they were already used to eKYC mechanism, one or the other. Whereas all other places, there was no eKYC. But when we look at from the point of view of other sectors, I would like to quote over here a few of the examples with regards to pharma sector. Recently, during the pandemic, we have seen that as far as pharma is concerned, there were a lot of shortage of certain medicines and oxygen cylinders. But they were available in black market. If it was shortage, it should not have been available anywhere. If those medicines were available in black market, that means that those medicines were sourced from the place without having a proper KYC. The people who got those medicines to do black market have been able to secure those medicines without identifying themselves. And ideally, those medicines were meant for the patient, and we already have Aadhaar. It would have been much better if pharma would have adopted Aadhaar-based KYC and issued the medicines only to the people who would establish themselves as the patient who required that medicine. Let us take the example of pharma again. When it comes to talking about a particular injection, now I am not going to quote any names because I don't want to bring in any kind of debate over there. But a particular kind of injection, we were trying to source for one of my cousin who was on a very serious, condition, and that injection had to be given in 24 hours. But the process for securing that injection was that you have to get a certificate from the hospital, go to the collector, identify the patient. The collector will do the KYC of the patient in his own way, and then he will give a letter of permission that this injection may be issued to this person. And then you go and find out that injection where it is available in the whole country, because it was not available locally at one place. And then the injection had to be shipped to that location where he was admitted and given to him. Now, with just an eKYC mechanism introduced in this particular process, I think this whole permission and everything would have got cut down, and it would have been easily made available to the patient, whoever and wherever he is. The third thing that I would like to call out over here is, even though everyone in the country had Aadhaar, when you actually go to a medical shop with a prescription, now whether that prescription may be for a headache tablet or an anti-allergic tablet or a very serious or very critical medicine, the medical store person looks at the prescription, looks at the doctor's name. If that doctor's name is not in his record, he adds it to his database without verifying the doctor, and he issues that medicine to you. Now, I could create a letterhead, Dr. Milind Mungale, put some medicine over there, go to the medical shop, he will add my name as Dr. Milind Mungale over there, and issue me that particular medicine. Now, this is one example of pharma. There are examples in each and every sector. When you sell second-hand car, and recently you have seen that that second-hand car has been used in a crime very recently, a very high-profile case which is going on. Now, that second-hand car was not even transferred to the name of the buyer for nearly 4 or 5 months. Now, that would have been very easily, cut down if at the source itself that eKYC of the buyer would have been done and registered somewhere. So there are very many examples where we have an infrastructure, we have data, we have necessary APIs, but those things are not adopted. So that's what I would like to bring to the table over here for the audience who primarily are from other sectors to start building use cases to use this eKYC in a particular manner.
Makes sense. Very pertinent thoughts there. And like you mentioned, there is application elsewhere. You see a lot of these micro lending platforms and app-based lending platforms and intermediaries for insurance companies leveraging digital KYC. But I guess somewhere there are definitely opportunities where a lot of the other sectors and other solution providers can maybe pick up some of this stuff, and with the right support from the regulator, can start implementing this. And which kind of takes me again to a connected question. This again, Nick, I'm going to toss this to you. Sorry, Harvinder, this is for you. Now, given the context we have so far, and the fact that in India we already have an infrastructure, Aadhaar is there, and could you help the participants today understand, and everyone here understand a little bit about what probably it takes in terms of the infrastructure and technology deployment for putting in place something like a digital KYC for an organization, and if you can maybe give us some anecdotal references around the manpower, resources, costs, etc., and other considerations. Harvinder, I think you're on mute.
My sincere apologies. And I think I would like to, it's a very valid question, Rahul, and I would like to add this to point two that Milind spoke about, including the financial institutions and non-financial institutions. Whether you are a bank or a non-bank, KYC provides solution for any industry and is a must-have in today's scenarios to prevent oneself from not only frauds, but also to stay ahead of the curve. Non-financial businesses are definitely as vulnerable to business risk due to identity frauds while onboarding new customers as are their financial business and counterparts. For example, think of skill-based real money gaming business that have to deal with the risk of online players stealing someone else's identity at cash withdrawals. Education tech firms trying to verify the identity of online tutors. Telecom companies trying to perform eKYC for mobile subscribers, or even online match businesses that have to deal with the fake profiles. The risk of not being assured of who you are doing business in a digital realm continues to be even for non-financial companies as well, along with financial institutions. But thankfully, now with access to new and emerging technologies for KYC and identity verification through artificial intelligence and machine learning, many companies are taking steps to solve this problem, be it gig economy, gaming companies, non-financial institutions, and from a financial institutions standpoint as well. In addition to this, API-based checks such as PAN NSDL, Aadhaar XML, these businesses can now protect themselves against such frauds without compromising on user experience. What we continue to observe, not just in India, but around the globe, is an increasing trend towards an ID plus selfie-based approach for onboarding. And some of the bank and financial institutions have onboarded much more friction layer of video KYC journey. Even Gartner, if you look at that also mentioned in its report earlier this year in 2021 IM Trends, that confers a high degree of protection against such frauds through AI algorithms trained on high amount of real-world data to look for potential signals of identity theft. Example, you look at document tampering, selfie spoofing, face match, falsification, without having to rely on external database that only a few regulated entities might have access to. In fact, we at Onfido see a significant share of our business in providing such technology, not just globally, but also in India, coming from some of these non-financial businesses as well, which we see only increasing year on year.
Right. So, Harvinder, what you're saying is that there are measures built in to prevent identity theft, at various touch points, and we have the technology and expertise to kind of strengthen that. Any thoughts on specific vulnerabilities and risks that you've seen, and how potentially you see that being mitigated as we go on this journey? And please feel free to pitch in others as and when you want to, because I know this one area would be very, very prevalent for you, for your relevant stakeholders. This would be a regular ask, right? What are the vulnerabilities and the risks, and how do we mitigate these? I think, Harvinder, you very well touched upon the means to mitigate, but would be good also to understand specific vulnerabilities and risks that you've seen.
Sure. With the help of right technology, answer is yes, it is definitely possible today. But more importantly, what is also needed is a proactive rather than a reactive mindset towards risk mitigation in order to stay ahead. A lot of times we see businesses being tempted towards keeping a digital KYC process at the bare minimum and at onboarding to save cost, or to keep negligible friction, and they end up incurring hefty losses due to missed frauds in the future. And on the other hand, we also see businesses who end up conceding potential revenue to their competitors by introducing too much friction, which could ideally be avoided. What we have seen works best is when businesses find the sweet spot between security and customer experience at the account opening stage, so they have robust security in place while at the same time staying competitive. And I think Milind quoted a very good example. Due to pandemic, if you look at, a lot of drug trafficking actually happened, but if you would have done the right KYC at the right stage, we could have been easily avoided. And similarly, if you look at that, last year, Gartner talks about one of the report which talks about that there was close to $5.9 billion transaction due to identity theft, which could have been easily avoided at the time of the opening of any account when customers were accessing services or customers were accessing products. And that can be made possible when you know what is sweet spot that works for your business. And when you have the right partner who can not only provide you the right technology, that can provide you comprehensive intelligence on multiple fraud attacks, vectors to stay ahead of the fraudsters, but also work closely with you to understand what kind of a solution would really works best for your business. Globally, regulators like FCA, TAFIN, and ANSI have been innovating on how to balance security with ease of use and accessibility in financial systems. We see approaching from no IDing documents needed across to a live video call. All of these aim to evolve to strike the right balance. RBI has taken many positive steps in this direction by implementing video KYC and leveraging the Aadhaar stack for onboarding for certain entities. But at the same time, it's the high time to leverage AI and ML solutions to create more robust self-assisted video journeys, which most of the global banks and financial institutions are leveraging. I think that will really help the financial institutions and non-financial institutions to come and create a balance and accessibility and adaptability at a higher scale, to access the services and build the trust on the consumers.
Thank you, Harvinder. Very, very pertinent thoughts again. I'm gonna bring in Timmana with some context here. So Milind mentioned other sectors, some examples from pharma where probably the existing infrastructure and capabilities would have been could have been better leveraged. Harvinder, you've touched upon the safety and security aspects means already available. I think this is definitely very relevant from the provider and the user's perspective, but a lot of this gets lost when we talk about consumers, right? Because in most of the KYC or eKYC situations, it's kind of like a mandated requirement for the consumer. So you're not giving them a choice, and they also don't really have the option to pick and choose, right? So, and in a lot of situations, you would see that this kind of leads you inadvertently. It can put consumers in a situation in certain aspects where they probably walk away with some bit of cost, which they may not be aware of. So particularly bringing in Timmana there, if I were to talk about, let's say, online aggregators or intermediaries for financial products, they use their platform to perform algorithm-driven KYC at some level. So there's an initial level of check, but probably what the consumer doesn't at times understand or may not be aware of is multiple such requests somewhere at the back end have the ability of hitting the credit score, right? Particularly if credit scores as a mean is being used to do first level of check before the other information is asked for, like PAN and Aadhaar and other pieces of ID. So what has been your experience there, and do you think that there is a need for somewhere us as stakeholders and the primary providers to build in means to educate and empower customers to some degree, so that at least they have informed decision making when they're making the decisions?
Yeah, I'll pick it up from the driving license. Why are we carrying driving license? Because the police wants it, right? It's a reactive in nature. It's definitely not proactive. Why are you carrying your RC book on your car or a copy of that? Because somebody is going to catch you and penalize you, right? The last 2 day sessions are all about risk control, fraud control, reg tech, regulation, policing, catching, and all that. We have never spoken one positive word about. There is no consumer here. There are no consumer groups who are representing in any of the sessions. I would have been happy to share the dais with them, and I represent the consumer. And I said, look at WhatsApp. Who advertised WhatsApp adoption? It is high utility and it is not mandated, right? There is famous word called tatsvam asi, in Sanskrit, and know thyself in I think our Socrates. And if you go back, that self-realization, that self-identity, that giving that I back to you. Today, if you go and if I say I'm Timmana, bank manager just doesn't recognize me because I don't have an identity to carry. So that identity has to go digital. It has gone digital. DigiLocker has done enough. You spoke about others. A lot of people are speaking about other than BFSI. We are nobody. Onfido is nobody. Watchstone is nobody. Bank Bazaar is nobody. Paisa Bar is nobody. If I do a KYC, it is not acceptable to the lender. It's not acceptable to the provider. He has to do it again. So what I'm doing is curating, cleaning it up a little bit before I go there. I don't want the higher rejection. So what I am doing is not useful to anybody. Hence, customer feels, you spoke about bureau. And I think there is a little bit of bureau and all that. Even if I do a bureau, again, he's going to do another bureau. What I do is a soft pull. What he's doing is hard pull. So can we convert? You said awareness. If you want to create awareness, it is an enablement piece that we are talking about. Last 2 days, when I see this, all the session, it's all enablement, protection. We are talking about the 1% of people who will sneak in and applying that standard to 99% of the people who are harassed because of that friction. We are creating the friction to avoid the 1%. Fintech is not regulated. Hence, we are not allowed to do any of these things. We have to do it for somebody. I have to be working with a regulated entity. DigiLocker says, we were one of the first guys to get access to DigiLocker as a requester. When we proposed it, I said, no, we don't give it to unregulated entity. Then we bargained for building it for a regulated entity under RBI, IRDA, or your SEBI. That was good. And we are the first guys to get B2C access to bureaus in India. And we went to Experian. Experian was the first guys to approve. It had come in US. We followed up. We got it done. And thereafter, I think everybody has got it today. What I'm saying is, let's push it. We want the consumer awareness. Tell him that it's about you. It is not KYC. KYC is a stiff upper lip. We call it, very stiff word. Know yourself. Who's doing that? Provider is doing that. Why don't we convert that to know yourself? Know your customer to know yourself, KYS. I said, I want to own it. I want to create it. I want to control it. That is only possible. I think later on we can discuss. It is only possible if you bring the DigiLocker plus the blockchain, maybe. And I want others' thoughts on that.
Interesting.
I'd like to say something over here.
Yeah,
Rahul,
please.
I'd like to say something over here. In fact, Timmana has brought a very, very interesting topic. You would see we have Aadhaar for last 7-8 years now, more than that. And still, there are so many Aadhaar holders whose mobile numbers are not updated on Aadhaar. When the Aadhaar was subscribed or enrolled, at that time, maybe the main family member's mobile was given. Even if others were holding a mobile, it was not given. Secondly, those mobile numbers have not yet been updated by those people. So today, if there is a family where all the 4 members have the same mobile number given into their Aadhaar, and if one of them is trying to do a financial transaction, then the OTP will go to someone else's mobile. And that is where the concern and doubt comes, because if it is 2 brothers and the elder brother's mobile is given, maybe their relationship are not that harmonious today, and there can be a financial issue over there. So that awareness has to start by saying that know yourself, my KYC, my KYC, it should have all parameters which are related to me and not someone else. And as far as the family member's mobile is given, it is okay, but I have also observed that the person where you go to enroll, that agency would ask you for a mobile, and if you don't have a mobile, they would give their own mobile. There are so many other holders whose mobile numbers which are updated are actually belonging to the agency who enrolled them or the person who enrolled them. So that is one of the biggest challenge. We have to have one more drive, which would be initiating with this terminology which Timmana has invented, know yourself, and everyone should take up that thing to update their data. Address change. How many people are going and seriously attempting an address change for Aadhaar? Whatever address has been given at the time of enrollment, it still exists over there. We are going to take that address as our KYC. Imagine a bank giving a loan based on that address, and now no one is there on that address. So those are the challenges which are there, which we'll have to address. I mean, that's what I wanted to add to what Timmana said.
Yeah, just to add to that, what we have built so far is India stack. We didn't build Bharat stack. Why I say this is, DigiLocker is beautifully built. About 1.33 billion people records have been issued. That is, primarily you will issue Aadhaar and you will issue the PAN, because which are connected. They are already cleaned up. Both the names and all that is cleaned up. Other documents are not still cleaned up, so they cannot be issued. You can only pull them. Now accessing what Milind was talking about, the people who are not literate enough, they don't have a single mobile, they have a family mobile, or they've got a community mobile. If you see, there is a whole locality has got one mobile number. We are telling them, if the regulated entity is using a document, that guy is coming in person and leaving a offline consent or an online consent. Offline is most useful. We have built this beautiful offline consent for the US-based bureaus for a Gramina bank. It was a case study to talk about, I said, he doesn't have a mobile number. How can I pick up his mobile? He doesn't have a mail ID. They want a mail ID of a farmer. Where is the mail ID of a farmer? When we said this, I said, the bank is meeting the customer. He's taking an offline consent, keeping it on his file. Can the officer, who's the responsible person, mark an online consent on the system? I'll give you the call logs of the consent. We have to build hybrids. That I call it a Bharat stack, not India stack. We have not stepped, nobody cared to look at the Bharat stack. India requires Bharat stack, otherwise 90% of the people will stay out of your DigiLocker or UIDI. Sir was talking about PAN card. PAN card is not a POI. It's not a proof of identity. It doesn't have a photo. The photos before 2008 are not non-existent. You take your PAN and show it on a video KYC. I don't know why they thought about PAN card, because Aadhaar cannot be made mandatory. And that photo is already brushed in your purse, and when you take a photo, I think Harvinder has got a problem matching the photographs of the video KYC or a selfie. And these are the practical problems. How much you will increase the technology when you have already goofed up on the ground? Like we keep increasing the technology, but we are not cleaning up our act. Let's do both together. That will be the best balancing we can think about.
Thank you, Timmana. In the interest of time, I'm gonna club a couple of thoughts, and some interesting points coming here. You mentioned a blockchain, which is what I was kind of where I was going with for Nick, and also, Milind, your thoughts kind of you mentioned risks, and Tim also added. I want to understand your perspective on the new age risks that we this new format of KYC, right? We had a learning curve with traditional KYC. We met a lot of these risks, mitigated them. I'm sure we're going to see new versions with KYC. So would be good to get your thoughts on what kind of new age risks do you see, and any thoughts to mitigate, or maybe at least build measures where we can maybe make it harder, and also what role potentially in this context, and also for centralization of KYC information, can something like a distributed ledger technology play? So that's Nick and Milind, if you can maybe add to that, and then we'll open up the forum for Q&A.
Sure. It's a really interesting area. I think we've touched upon this already, and I suspect that other panelists may agree, but really the system isn't irrelevant, but it's not as important as the processes that go around it. If you put rubbish data in, you're going to get rubbish data out, and it doesn't matter whether you've got a blockchain, whether you've got a distributed ledger, whether you've got Aadhaar. It doesn't matter what system you've got in place. If the data that's in that is rubbish, you will get a rubbish outcome, and you will not be able to manage the absolutely massive risks we've got in digital KYC processes, in terms of synthetic identity, which is being fueled by the sort of unprecedented level of data breaches we've been seeing. Account takeover fraud is a massive risk. Those elements really, you need to make sure that the processes around that KYC implementation are fundamentally sound, and I think that's where a lot of the work needs to come. In terms of distributed ledger technology, it's a really interesting one. We've seen quite a few deployments. We've seen some sort of shared ledgers for KYCs being launched in some other countries. They're still quite niche at present. We have seen blockchain has worked in sort of areas like money transfer, land registry, some of those areas yet, but it's still very early stages for blockchain. But I really would just say, currently, the technical systems that are in place are pretty robust in the Indian market, and you've got this Aadhaar system that is very robust in terms of the technical design, but it's about getting those processes about what's going into that system and what's going into all these other systems correct. If those processes aren't sorted, blockchain won't make any difference at all. It will just transfer the existing process into a distributed ledger format, which is of no real benefit. So I think it's really about getting that right.
Makes sense. And last 3 minutes, your thoughts on...
I'll add just 1 minute to this discussion. Nick has mentioned about the blockchain, but what I see blockchain can solve as one of the major problem is the disparity of regulatory requirements by the various regulations and various regulators. Today, RBI allows video KYC, someone allows XML-based KYC, someone wants OTP-based KYC. Ultimately, Aadhaar is Aadhaar, individual is individual. Depending on what service he is trying to subscribe to, the way he has to do his KYC is different. But with blockchain and distributed ledger, maybe all the regulators would have that confidence that they are accessing and they are having the same kind of data. And maybe they will be willing to tweak their processes to standardize on the KYC mechanism itself. The second most important thing that can happen as a reform in our country is that if one regulator starts to, agrees to accept the KYC done by other regulators, then it would be very easy. If you have a KYC done for opening a bank account and the regulator is RBI, tomorrow you want to open a broking account, you don't have to do any other KYC. The same KYC can be used because one regulator has already honored it. So from that point of view, I think there can be a lot done. And with this blockchain specifically because of its nature of distributed ledger and the data being there in sync everywhere, it would be very, very handy. A lot can be spoken on this, but we have more time constraint now.
I have a small 30 seconds to add to that. We have moved from a proprietary KYC, which is proprietary, to CKYC, again, central. The minute you use the central, it is the interoperable KYC. Again, you know that it's got 3-4 years of history or more than that. It is a failed system. Everybody accepts it. Only SEBI has adopted it well, but the lending system or the banking system didn't adopt it well. From there, we have to move to the not the self-sovereign identities, but federated identities, which are acceptable to the BFSI, which are acceptable to the government. That doesn't exist anywhere. As I think maybe Estonia has done some one citizen, one ID, because it's a small country, they could handle it. I think we should move. No, the DigiLocker has got enough infrastructure. Maybe it requires a layer of a blockchain, just a layer of a blockchain, to step ahead and make create the extreme convenience for the customer. That's what we have to look at now.
In fact, DigiLocker, giving the example of DigiLocker, it was a fantastic opportunity that for issuing the vaccine certificate, instead of COVID having its own infrastructure, it could have dwelt upon the DigiLocker, saying that whoever will take the vaccine, I will populate the certificate into their DigiLocker.
It is
could
there.
have got adopted.
It is already there. Yeah.
Ultimately, it is not popularized the way the DigiLocker would have become adoptable to everyone. Today, by default, I go to Open app and download my certificate. By default, I should go to my DigiLocker and download my certificate. So that's the cultural change which could have been brought. Like,
yeah, DigiLocker has to become single source of truth and layer it with a blockchain. Yes. Will be fantastic. There are no parallels in the world to DigiLocker so far, I've seen.
And same with driving license. You have Parivahan, M-Parivahan, from where you get a driving license. Why will you go to DigiLocker?
Thanks so much. I'm sure everyone kind of has a lot of questions, and we will try and accommodate a few. I'll just open up the forum now for questions. I already see a few on chat. We can either take those, or do we have any other questions which are lined up? Unless we have, I'll pick the ones we have on chat. All right, so you know, I think one of the questions we kind of have been asked is already reasonably well covered, so I'm going to skip that. The first one that I see here, which I'm sure everyone will love to hear your thoughts on, is mainly around this thought process of financial frauds. You know, the consumers being insured against them. But when it comes to KYC data confidentiality and loss of customer data, given that a lot of this data is probably housed on cloud, local servers, you know, you don't have that visibility, right? Really, where the information is sitting, at least when intermediaries are involved. What kind of risks do you see, and do you have any kind of view on how do you see this evolving? Maybe this being mitigated with some added bit of regulatory supervision.
Yeah, so far, so far it is only covered under IT Act 43A, and we are waiting for the latest law which is going to repeal this act. This section is your data protection and privacy bill, right? It's going to come up in this parliament. I hear yesterday somebody was talking about it. Thing is that once it comes, maybe, you know, like so far it is just the organizational responsibility to hold, and it is under IT Act, not good enough. I mean, even in US, it's between the customer and the technology companies or the BFSI. There is not too much. I think only California state has done some act, and it's going to be the standard. Now we're going to do this, the bill based on the GDPR. You know, once it comes, I think everybody will take it serious. We want to protect, but we will take it more serious, and see that okay, first the data belongs to the consumer. We have not agreed with that. It belongs to him. He owns it. He controls it, and he should he should be able to complain that it's misused anywhere. That's called layering of the data. Like is a specific consent for what data is being, for what purpose and what period. All of that has to come into play. Unless that comes, everybody is like open out there.
Thank you. I'm going to try and squeeze in one more question. We press for time, but this is a very interesting one. Your thoughts on latest trends of fraud using digital KYC? You know, something interesting you've seen or unique you've seen. I think that's where your practical learning will kind of weigh in, and it'll be very useful for the participants today to have a feel of that.
Yeah. I can pick this up, and I'm sure I would, the group is open, in fact. Into the identity world, it's not about only India where the frauds are actually happening, it's across the globe. And it's like today, if you look at the fraudsters, they have a full-time job between 9 to 5 to create an identity theft challenges into the system. Recently, what we have seen, a lot of impersonification actually happening on the document. When you change the name, keeping the same photograph, and put as a ping the government database, and you are verified. That is one of the very common fraud that people struggle with. The second is like change the face of the document, put my face on top of it, take your document, verify that. And today, humans naked eye is not possible to detect those changes within the document. So definitely you need to leverage machine learning and artificial intelligence to detect. In fact, I'm sure a lot of buzz that we have heard about the crypto market. I'm sure what crypto market is bringing into the system is bringing variety of fraud segments into the world. A lot of financial institutions, lot of customers, when they need to do a little bit specific crime against the document, they learn how the crypto market is actually behaving. Recently, what we have seen, a lot of 2D, 3D masks are also being adopted by the consumers and utilizing that specification to buy the product or buy the services. Sometimes, even if you look at that Interpol, probably when people pass through some of the gateway of the immigration, and when you realize that even humans do not have a capability to pass on more than 75 to 80% of accuracy on those documents specifically. They can't do that. Humans' eyes are not meant to do that. You need to leverage technology, artificial intelligence, blended with a human competency to overcome these challenges. And that's what we have been doing. And today, we have been working with a lot of banks into the world, be it Barclays and other banks of the world, wherein that we are helping them how to catch those emulated frauds, which is much more sophisticated, which are more deep fakes, and helping consumers and helping customers to build that relationship. So I think a lot of learning is actually happening. And we can't say that if we will catch 100%. None of the environment can catch 100% because fraudsters are smart. They're learning. You build the practices, they're learning. But at the same, you need to be much more smarter, and your technology needs to develop much more strongly on top of it. So you need to keep adding the layers to protect the customer rights, and at the same time save the companies to incur any financial losses in future.
And famously, the EASE 3.0 says, do everything digital, but meet the customer, be in touch with the customer. And that can just avoid all of this, create extreme convenience, but you have enough time to meet the customer. Don't take it away, because banking or BFSI is about relationship. Don't take it away. If you take it out, there's no fun in BFSI.
Makes sense. Thank you so much, everyone. We are on time now for closing the Q&A. I'm going to hand this back for closing remarks. It's been a pleasure, and thank you so much for your thoughts and taking the time out today. Closing remarks, please.
Yes, thank you, Rahul, and the speakers for a very interesting discussion. I think our delegates have enjoyed the knowledge that has been shared by by domain experts such as you guys, and we'd like to keep the delegates away from the next session. We'd like to thank our session Refinitiv, a gold partner Ryota, a bronze partner Onfido, and knowledge partner EY for helping us bring this event live. And thank you all the speakers and moderators for attending. Thank you.
Thank you, everyone who joined.
So much.
Thank you very much.
Thank you. Hope you guys stay safe. Have a good day ahead.
Bye-bye.
Thank you. Bye-bye.